It's my pleasure to welcome Darcy Henneberry. Come on up here, Darcy.
Hi, Aurora.
Nice to see you again.
And you. Thank you for having me. It's an honor to be here.
It's great to have you here. He is an amazing person. I love how you show up and as such a contribution in my life and other people's lives. And he's the co-founding partner of Mortgage Pal. Have I got that right?
You certainly do.
All right. Take it away.
Thank you. Thank you, Aurora. Hello, everyone. As Aurora said, I'm Darcy Henneberry, co-founding partner of Mortgage Pal. And I'm here today to discuss with you something that I'm quite passionate about, mortgages. And it's really, it's not the mortgage that I'm passionate about, it's the Canadian, it's the human being behind the mortgage and the lifestyle that a mortgage creates for Canadians across Canada. Now, in Canada, I find that there's a myth here. And that myth is that if you want a mortgage, you have a handful of options. Basically, the banks, maybe a credit union. And typically what you're going to do is you're going to pull out your wallet, and you're going to see a card, and you're going to say, okay, I have a relationship with a bank. And that bank knows me. So that's where I should go to get my mortgage, because I have a relationship with that bank. That bank's likely more likely to approve me and definitely going to give me the best rate. Fact is, that's wrong. The fact is that there are two major lending categories in the market. You do have your big banks and your credit unions, and absolutely, they serve a purpose in Canada, without a doubt. There's also another segment in Canada called wholesale lenders. And these lenders, you may not know their brands. You can only access them through working with mortgage brokers, but they are a phenomenal solution to provide you with a fantastic mortgage that not only meets your current and future needs, but provides you with a fantastic rate that often beats the bank rate that you would get at your local bank. The reality is, relationship pricing is a thing of the past. Simply because you have a relationship with your bank does not mean you will get the best rate or mortgage with your bank. So we're going to talk a little bit about a few of the reasons why these two segments are different. But before we get there, a little bit about why I'm passionate about this. So I started my career about 10 years ago at one of our banks here in Canada, and I started in the banking industry because I just really wanted to understand finance and business, and I figured what better place to get that education than to work with a bank. And I started with the bank just before the market collapsed in 2007 and 2008, and it was a phenomenal opportunity to be there and witness the market collapse that I was seeing on the media, really didn't quite understand, but then had the opportunity to witness it from the behind the scenes in the bank and on those conference calls and so on. I worked my way through the bank, and 5 years, by the end of the 5 years, I started to realize that we really weren't serving our clients. We were serving our shareholders, and we were serving ourselves. And it didn't quite sit right with me. So I found the opportunity to leave the bank and become a mortgage broker, an independent mortgage broker. And 3 months into becoming an independent mortgage broker, I realized I would never go directly to a bank to get a mortgage. By the end of my banking career, I was managing high net worth individuals, and I knew nothing about a mortgage. I thought I did. I knew everything that the bank had taught me. But I knew nothing about the mortgage world and mortgage options that I was providing to my clients. I didn't know how we were registering our mortgages on their title and how that impacts them in the future. I didn't know that we were charging massive penalties in comparison to other options that exist in the market. And I didn't realize that we were doing a disservice to our client by offering them posted interest rates upfront and at renewal. And those are three major ways that clients are losing money in the Canadian market. So firstly, posted rate. As I mentioned last, there's a posted interest rate that you can obtain at the bank. That posted rate right now is roughly around 4.5%, 6.5%, depending on the term and the institution. You as a consumer need to go into the bank, sit down and request a mortgage, you work through the process, and that bank is going to offer you a rate. Generally, they're going to say the posted rate's here, but we're going to give you a discount. And you're going to think, oh, great, I'm really well valued. But what you don't realize is that that rate isn't their bottom line. If you want their bottom line, you need to be a negotiator. You need to be skillful in discussing and negotiating and get that rate lower. But you don't know that the next person's getting a lower rate or not. And so that posted rate creates a bit of a distrust between you and your institution. And what they're truly paid for and remunerated for, the banker, is to keep that rate higher and keep as much of that interest in their pocket. That posted rate comes back and sneaks you and impacts you a couple of times throughout the transaction as well. At renewal, when you receive a renewal agreement, you receive a renewal agreement that shows the posted interest rate. Often, Canadians will read that renewal agreement and will sign it and choose the term that they think is right for them. They will sign it and they will send it back to their banker. This happened constantly while I was a banker. We received the renewal agreement. It was automatically mailed out to the client. If the client did not come and talk to us, we were not supposed to discount that rate. That didn't sit right with me. So what I did is I contacted my clients. I got in trouble for this, actually. I contacted my clients and I said, okay, so you've got an agreement in front of you. It says 4.69% on a 5-year term. Yes, I see that. Okay, great. Don't sign it. What I can do for you is I can give you a rate of 2.89%. How does that sound? Oh, that sounds great. Now, of course, the rate actually wasn't that low when I was a banker. It was a bit higher. It was about 3.29, actually. But I still brought that rate down to the lowest that I could do because that served the client the way that I felt that I would want to be served if it was me. Now, that posted rate comes up again and impacts you. This is something that's really interesting in Canada. Most Canadians choose a 5-year term in Canada. About a 25, 30-year amortization, that's the length of the mortgage. But we generally buy our mortgages in terms. And most individuals buy a mortgage in a 5-year term. The reality is that 60 to 70% of 5-year mortgages get broken at around the 3.5-year mark. Life happens. Think back 5 years. Where were you 5 years ago? Right? Did you think you were going to be here? Maybe something happened. Maybe you had a medical emergency or a family member had a medical emergency. You had to refinance, pull out some equity, pay some bills. Maybe you got a job. You got, wow, I got a promotion. I have to move across Canada. I got to sell my home, get a new home. Things happen in 5 years, and the reality is the majority of individuals have to break their mortgage during their term, and there's something called a penalty. You're breaking your mortgage. You have to pay a penalty. Naughty Canadian. That penalty on a fixed interest rate can be in the tens of thousands. I have a couple of examples for you on that regard. I had a client recently that had a 5-year term, $350,000 mortgage, was at a big bank. He had a fixed rate mortgage. He had 2 years remaining in his term. And that penalty on that fixed rate mortgage of $350,000 was $18,500. That is 5.6% of the mortgage balance. Another client, 10-year term, 4 years into the relationship. I just heard this, blew my mind. I just heard this on Thursday. 4 years into a 10-year term. Also, coincidentally, this is coincidentally enough, roughly a $350,000 mortgage. $40,000 penalty. Blew my mind. That's 13%. How are we doing justice to our clients when we are stealing their hard-earned equity, their after-tax equity? It doesn't make sense. And on that note as well, I'm going to digress for a second. There is a Interest Act in Canada, and Section 10 of the Interest Act dictates that if you are in a term greater than 5 years and you've surpassed that 5-year anniversary, they can only charge you 3 months interest. 3 months interest is roughly 0.5% of the mortgage balance, depending on the interest rate, 0.5, 0.6. That person only needed to wait out his term for about 6 months to 1 more year, and he would have dropped from a $40,000 penalty to roughly $2,500 penalty. But he did not get the advice from the bank, and he waited out his term at a very high rate. So we're not getting the education that we require and deserve in Canada from our banks. Now, I mentioned at the beginning of the conversation that there's wholesale lenders in Canada. You can only access these wholesale lenders through mortgage brokers. I truly believe you get your best mortgage through mortgage brokers because they are there to serve you, not the shareholder. You are actually their boss. They are your staff. And they are there to serve you. So wholesale lenders have a different way of calculating a penalty on a fixed rate mortgage in Canada. That same $350,000 mortgage that my client had a $18,500 penalty, at a wholesale lender, that exact same mortgage would have been $2,500. And there's just simply because of a different variable that they use in calculating the penalty. And that variable, the banks, they use that posted rate that I discussed. The only difference is that the wholesale lenders use the best client rate when they calculate that penalty, and it creates a massive difference. Wholesale lenders, you're generally going to pay about 0.5 to 1% of the balance as a penalty. That same mortgage at a bank is roughly 3 to 8% on average of the balance. Amazing difference. And you, by working with a mortgage broker, you will get the education you deserve. You will understand the options that exist at the banks as well as the options that exist at the wholesale lenders. And that mortgage broker will help you hone in on the most appropriate option that meets not only your current, but also your future needs, and creates plans with you to ensure that if your life does change unexpectedly, you will not be impacted by massive interest rate penalties. You will be well served, and you will keep that cost as low as possible. If you'd like to learn more about how mortgage brokers can serve you and your friends and family, feel free to come and talk to me. I'll be at the back of the room. It's been a pleasure speaking with you all. Have a wonderful afternoon.
Well, what a great presentation as our final presentation of the day. Totally rocked it. I love your pacing, your presence, your energy, your modulation, you made it easy for us to follow. So that was really awesome. I loved your passion. Like you really got me, like you cared. And you even told like a revealing story about calling and getting in trouble with the bank, giving them the best rate. So I know this is somebody who's going to look after my interests. So
pardon the pun.
Yeah, pardon the pun. So you had both. You had the humanity and you had the expertise. So that was awesome. And you really owned the space. Like you owned your power. You showed up in your power. Well done.